Hello guys, glad to have you on board again today. Before we just get started, I want to remind you that yesterday we've been making a live room session, and the users who were live in there said they were learning quite some interesting things. So I suggest for those who weren't able to be there in live session, of course there will be the replay, and I'm gonna upload this one slightly later today. So I invite you guys to have a look at this one, which is took the latest few trades I've been making and just took a lot of time to review those and all the mental process that led to the entry and the risk management and things like that. So I think there's a lot to learn out of this, at least that's what the user said. So I invite you guys to get there and have a look at this if you have time for it. Anyway, we're just going to get started and do the standard usual analysis, and getting started as always with the cryptocurrencies and the Bitcoin first. So we zoom out and take a quick update out of the context, see if we have new information or not. Regarding the daily chart time frame, we don't have that much of a new information. We're still working the pretty much same pattern. We had bearish signals down here, bearish momentum alerts down here. The market just flushed those out and broke through the sine wave targets. So we are at risk of installing a bullish trend, mean reversal bullish trend, which leads me to believe that this is not something that is going to last for a long time, but just something that might just getting there, eventually some kind of round topping in here, but doesn't necessarily going to last for a long time. Just because this is a mean reversal. So at that point, it's not possible to sell in terms of daily chart time frame, because what we have is just a strongly bullish momentum, and I think we could have one more push. So from what I can expect right now is the momentum to dampen a bit throughout the next weeks, just pulling back to that level, which really requires a pullback. And I think right here we might eventually forecast some kind of bullish reactivation pattern, but that will require the momentum to retrace back to the zero value and reach out to the bullish support trend line, which means probably sometimes not doing anything and just waiting for the market to slowly pull back and offer more interesting prices. Okay, so basically waiting right now seems to be the best option in terms of daily chart time frame. If we get to the 2-hour chart to have a more precise view in here, we're going to have to see that the sine waves just reversed bullish with a price confirmation, but we've got nothing out of momentum, which suggests that buying right now might be a little bit dangerous, and I think we can expect a second pullback, kind of an ABC correction seems to be the movement at the moment. What the hell? Okay, sorry. Was surprising. So from what we can have right now, we can clearly see that we have an underlying mid-term support in here. We've got nothing close to signals down here, so I'm not necessarily confident that this will be some kind of buying opportunity. So I just take this as being a key level. It's nothing close to be a support in terms of signaling from the indicators. But if we do break down that bullish cycle, meaning if we're just going down one more time for an ABC correction, well, we'll break down that bullish cycle, and the target will be near the current prices area, near that support. Just remember that sine wave will just take there, find for the highest close or the highest high on 20 periods. So we're going to take this, I guess, and this is going to give us it's not, right here as we have a bullish trend. It's not going to take this, it's going to take the highest candle close. So highest candle close down to the level is going to give us a target right here. So right, suggesting that support and giving additional information toward that area, creating some kind of technical cluster in which you can eventually search for bullish signals. So we'll be bullish in sine wave in such cases, and if that's what's about to come, then if we do have any kind of momentum confirmation near those prices, that might be considered as a potential bullish entry. Risky bullish entry, because I think if you're going to take this one, you have to put a very large stop loss, and the stop loss must be there, which means that the targets will be maximum 8,700. So it's not that big of a deal in terms of risk-reward ratio, so don't put too much effort into that trade and too much leverage either. It's just that wait and take an opportunity only if you have a strategy opportunity. Otherwise, if you have no momentum confirmation, just don't buy here and wait for the signals to go lower. From what I can expect, I've got those two scenarios ongoing. Either this is just an ABC correction and we'll find a support and build a support in here, and then we're probably going to have to extend the range to the highest resistance, and we're going to maintain the range in between those two levels, between support and resistance. Option number two, we fail in here and got to take the lowest support area, and in that case I think the range is just going to be there below the 61.8%. Okay, so it's either we're going there or we're already reaching out to the nearest support to get slightly higher afterwards. Okay, so that's it for the Bitcoin. I think anyway there's not going to be the interesting risk reward ratios anymore right here. It's just going to be kind of range tradings. So put a very large stop loss, be really patient, wait to have clean signals to trade, and if you don't, just don't trade. I mean, not trading the ranges is obviously the best choice whenever you are down those situations. Now regarding other cryptocurrencies, we've got IOTA. I'm going to start with this one. It's been making a pretty nice breakout at the moment. We've been breaking a bearish cycle, nothing close to breaking a momentum confirmation. So this is not a resistance that we've broke, simply breaking a cycle. So we've got the extended cycle right up here, could be a target for the bulls. So those who've been wanted to see the IOTA performing might be handling the risk right here. So what I'll be doing personally, as I still have my stop loss pretty further away, I'm going to just move up my stop loss, and this is the only thing I'll be doing today. I mean, we're going to have a look in there at the daily chart as well, just to have a clue, see if something has been changing. Yes, we've got a momentum confirmation out of a squeezing pattern. So it's nothing that we can trade as a confirmation right now, because the squeezing pattern requires a breakout. And as you can see in the daily chart, we have nothing close to this. So the breakout is going to be either there or breaking down the support. So I strongly suggest that the stop loss must remain there, but not too close, because if you're putting a too close stop loss out of a squeezing momentum, the risk is just to have a false breakout that you get stopped out of. So for now, my stop was pretty much there, and I'm going to narrow. Sorry, my stop was below the low already. I've been rising the stop yesterday, just as I rose Ethereum as well. So I'm just keeping the stop loss right below the previous low, and I will eventually consider some kind of pullback reinforcements, just as I've done with the Ethereum, and I'm going to talk about this one right after. This is the kind of price action I'd like to see: reaching the target, finding some bearish momentum, pullbacking slowly, and here finding a double bullish signal to get to the resistances afterwards, and eventually breaking those to get the nice bullish outcome that we've had on the Bitcoin, but having it on stronger cryptocurrencies. We'll see about that. I mean, that's a speculative scenario as always, but this is what I'd like to see. Now, in order to reinforce, I'm just going to narrow the stop losses and reduce the cost in terms of invalidation, and I'll wait to have a double bullish signal in some kind of pullback that I think will be a great opportunity to just buy. So this is where I'm ready to reinforce, and only upon that situation, which is finding a resistance near there, pulling back slowly and trying to buy this. This is what I've been doing exactly with the Ethereum yesterday. I've been buying the low, the price I've been given in advance and everything like that, so you had everything you needed. We just pulled back right here. That didn't trigger the double bullish signal, but you got the price confirmation with a momentum, slight confirmation. That's enough for me. But we got clear and clean bullish double signal in here, which we haven't yet which we don't have yet on IOTA. IOTA hasn't been giving a clean support signal, which is purely a good one in here, higher than the previous low, double bullish signal. This is really something I'd like to take. And as I missed that shot on Ethereum, I was already a buyer on lower prices, but I missed that reinforcement, so I took it yesterday as a late trading in kind of an expected pullback. But now I think the price is heading toward the target and probably going to break higher and install the trend. Okay, so I think Ethereum is now a validated trade, or at least is soon to become two. At the moment, we'll break up that resistance and manage to push higher than the breakout target. So we need to install a trend above and beyond the breakout target to be truly faithful in the fact that we have a trend in here, okay? So right now, I think it reminds me to be patient. And in terms of structure, we've got wave 1 to 4 overlapping with unextended previous wave. I expect the wave 5 to be extended and to lead us to either that resistance or this one. So this is $540 approximately, or $565 approximately in terms of targets in which I'll be taking profits, and probably entirely the profits to wait for a pullback and eventually buying again that pullback. I'm also going to add Ripple into the watch list. This is where we've had the perfect trade back down there. I've been missing that trade. As always, you're going to miss a lot of trades, okay? So don't blame yourself if you just missed a scenario. They will generally have multiple options to get into the trade even after the speculative perfect entry. So this is where you had the speculative perfect entry, higher high, taking profit pattern, confirmed by a blue triangle and a bullish momentum. So this is perfect bullish entry in here. As you can see, we had a really tight pullback in here, really sharp and brutal lower shadow candle. So it didn't lasted a long time in here. But as you can see, the momentum, sine wave is still oscillating, so we are kind of preparing for a trendy move, and I would like to see that trendy move going to the upside. So I expect the Ripple to at some point to trigger some kind of bullish breakout, and there is an opportunity to do it right in here, and I'd like to see that happening. So I've been putting an alert on that level. If we manage to make candle closes above that resistance in here, I think that will be good enough to trigger some kind of bullish burst, and I would like to see some kind of bullish breakout. What we have in here is a weak bearish cycle, not confirmed by the momentum. So from what I can see, high probability to break that up. Can be just tomorrow, or can be just today, or be tomorrow or 2 days away from now. I just don't know how long it can take. All I know is that as long as we remain above that support, and at the moment we will manage to break up that resistances, I'd like to see a bullish breakout pattern, and if that's the case, then I'll be ready to jump in as a breakout trade, which means I'll be paying those price approximately with a stop loss below the low, and I'll target a 1-to-1 ratio, so probably targeting this to take 50% off, and then probably expecting another push to a second target, for example. So this is basically what I expect in terms of price actions. Getting in here, finding the resistance, pulling back to a wave 4, and that will be wave 1, 2, 3, 4, 5 in terms of Elliott structure. Okay, I even expect this to be like that. I mean, doesn't expect the price to be very brutal, and I don't think that we'll be able to get into the upper boundaries of that pitchfork. Okay, I think we're just going to reintegrate and hold the mid channel. That will be more than enough in terms of timing. Okay. That pitchfork is just there to help anticipating and giving some clues about the timing. But remember one thing, this is just pure illusion. You're never ever going to control the market or understand it. It's the chaos theory and always will be, which means you are just fooling your mind by thinking that you can understand and assess things. That will never be the case. I mean, the market will forever do what it wants to do, and you'll never be able to anticipate fully anticipate the movements. All you can do is just narrowing the risks. Okay. So keep on moving. IOTA, have been talking about that. So we've been covering all the cryptocurrencies. So we're just going to move on to other asset classes. And these are today's catalysts. So we've got the ECB, can be a game changer, but I don't really expect anything out of this. It's more likely going to be a non-event, I think, regarding the ECB, or eventually we're just going to follow through the words used by Mario Draghi to kind of try and figure out if we can pick out a date for or timing for the first rate raisings. But once again, I know it's going to remain blurry forever because that's not the goal. They're not going to tell you where and when they will change the first rate hike, but this is how it is. I mean, they want to keep the things blurry. They want to give some view to the indicators, to the investors, but not that big. So it's going to remain blurry no matter what. I think they're not going to give away a clean date or getting engaged into anything close to this. So other catalysts today are durable gold orders on the US economy. It's going to be released 1 hour before the before the opening bell. So we'll see about that. That could be the only catalyst today. So we'll see how this plays out. We'll basically wait patiently to see how it goes. So we're going to watch out for this, but to be honest, the big catalyst was obviously Facebook, who's just been plunged by 22%. The last time I've been checking this during, it was 1 a.m. back here in Paris time frame. So it was 2 or 3 hours. It was 3 hours away from the candle close for the closing bell at Wall Street. So minus 22% for Facebook is just a massive ever drop. I mean, it's something comparable with Netflix, and as you can see back then, Netflix has been pulled backing just to erase some of those losses, offering the prices, and then we just fall again. So so I expect the things to be just the same. As you can see, making analysis is how it goes. I mean, I've been making pretty nice analysis. So we've been closing that gap. Okay, so we just went there, closing the gap at the lows during the overnight session, and we're going to see how deep it is. I mean, if we have a pullback, we can clearly pull back right here where we've got the previous market top in here. I think this is just stupid pricings driven by share buybacks and things like that, and just the fact that investors are not selling, and we have share buybacks to push the price always higher. But I think that mechanism is now over. We're going to narrow the prices as we are shrinking the market caps of those big assets. We're going to give them less cash to buy their shares, so it's going to be less buyers and more selling pressure. I think by the time it's going to take, it can take weeks to change the mindset of the market, but at some point I think right now the bullish momentum is seriously damaged, and we're going to see how it plays out in the next few days. But I think right now people have been understanding that share buybacks was just some kind of magic trick to prevent the assets from selling whenever there were risks of bearish activity. There was just that whenever we had no buyers and sellers waiting to get signals, we had the share buybacks to just push the price always higher and never breaking supports. But I think at that point, investors are going to focus on, are going to understand that this was just a magic trick, and that's not how the market is supposed to work out. When you don't have buyers, the price has to lower to find new buyers. It's not just the corporates who are buying their fucking shares to rise the pricings, okay? I mean, we are probably topping up in terms of profit expectations, so we don't have any reason to increase the pricings of assets. It's just pure fucking nonsense. Yes, there is inflation that pushes the price higher, but at some point we are at high risks of recession coming down the way, so we shouldn't get into crazy high pricings, and moreover, as we have danger volatility at play right now, we shouldn't really focus on just letting go the buy entries, letting go the long calls on equities and just waiting for things to collapse. I mean, this is not how we're supposed to work. When you've got pretty high pricing and increasing risk, you normally just take your profits, you take the money off the table, and you get into a wait-and-see kind of approach. But it's like US investors are just not focusing on the risks. It's just like the magic trick has been working just fine. Volatility was just solved. So guess what? This is what has been leading the market to higher highs for months. It's the combination of volatility selling and share buybacking. Okay, it's the only fuel that the market had. We had no buyers. It's just short-term buyers who are speculating on those share buybacks. But that's all. I mean, corporates have been buying their own shares, and sellers and central bankers have been providing the liquidity to sell volatility. And this was this year's big scenario: selling volatility to avoid problems and letting the share buybacks handling the bullish trend. But this is nothing close to a clean bullish trend. This is artificial bullish trend, and that leads to introduce distortions, clear distortions that we didn't have on other markets. As you can see, European markets went down. It corrected as people have been taking profit accordingly. People have been taking profit on the US as well. Do you think they haven't? They have been taking profit, but the fact is that the share buybacks have been covering this because those giga caps has crazy amount piles of cash and they didn't know what to do with it. So they just simply bought their fucking stock. But this is not how you create a bull market. Okay, this is not share buybacks that leads a trend. A trend means that people are buying, but not the corporates. I mean, people needs to buy to create a bullish trend. So the bullish trend that everyone is forecasting right now is just pure bullshit. And the fact that we've seen Facebook dropping 22% yesterday is the fact that this is true. I mean, we've been overpricing those shits, and we'll see how this plays out. We'll see how the investors will react to this. But at some point, if we're starting shrinking the cash amount of those big companies, they won't be able to share buyback anymore. And if we don't have the share buybacks, I think things are going to change. And bears will have a lot more room to play, and I hope that this will be a game changer. We'll see about that. Could very well not be the game changer, and investors could very well buy the 22% drawdown on Facebook and just buy it out. It's absolutely possible. I really don't know. So today's session is going to be key element to understand and see how the investors are reacting to this. I pretty much expect the market to buy this. To be honest, I think the market is going to buy at first intention because we've got crazy high bullish sentiment right now, which means that they don't fear anything at Wall Street. They think that this is going to work forever. Okay, I think this is going to last forever. This is not going to change and the trend will go forever. But guess what? We're in late stages of trends, late stages of economic cycles, and people still think the trend is going to go forever. I strongly think that the most rational choice right now is just to step out of it, being in a kind of a wait-and-see approach, or eventually trying some bearish speculative entries. But you know about that, so we're not going to repeat this forever. So in terms of pricings, if you have a look at the Nasdaqs, what we have in here in a term of a daily chart time frame is nothing good. Even though we've been making a pretty nice historical close yesterday, we've been breaking down the lows, which means this could be a bearish engulfing pattern today with a fucking nasty exit signal on sine wave, which is something the bulls won't like to see, So we'll see about that. We've got a bearish momentum as well, as we've been making new lows in here, and then didn't manage to make new highs. So we'll see about that. If the bearish momentum manages to exploit and take the prices down, that will be an interesting signal. Of course, this is some kind of, if this happens to be a lower shadow candle, then of course they will keep on pushing us to higher highs and higher highs forever until something cracks down. But we've been failing on a very big level, which is 100% extension. So if for some reason we were to go higher, we've got the eventuality to go right here at $7,650 for Nasdaq. But I think right now is nothing close to be rational to take that trade. I think the biggest risk is for the market to just collapse in here. And this is wave 5 of a wave 5 of a wave 5 out of a monthly trend, which means if this happens to be a market top, and if we are back to support and breaking them down, this is game over, and this is probably going to be the forever market top of that economic cycle. Of course, no one is forecasting this at the moment, but the most aggressive speculator like me. But this is my job to see things ahead of everyone else. Of course, that implies the fact that I might be wrong more than the guys who are just following the trends. But at some point, I take much bigger gains when I'm right than they do. So in the end, I'm making more money than they do, but I'm also taking more risks. That's how it is. The more risks you take, the better rewards you'll get. But of course, you need to handle that increased level of risks. So it means that this is more dangerous to trade like that, and that less people are able to do it. So anyway, indices are pretty much mixed today, and we'll see how they react at that point. This is pretty much hard to tell, but I've got the FTSE, who is in great danger to me. What we've had yesterday was a lower shadow candle, and first thing we've been doing today is pulling back to that lower shadow candle. If for some reason we were to break down, I don't necessarily expect this one, but if we're breaking down this one, I think we'll have a pretty nice bearish signal, and that will trigger lots of stop losses. I mean, the bulls who are trying to trade this I mean, just think about the market sentiment. People are not buying because they're thinking that we're going to go higher in 2 years. It's nothing close to this. People are just buying because the volatility is low and they think that there is a trend, a bullish trend, and that they should ride that trend until they get a bearish signal. But just to set things straight, I think that trend is just hypothetical. It's just the fakest ever trend that we've had. And at some point, people are going to understand that they've been fooled. And whenever they will release the gains pretty early and trigger the stop losses very aggressively. Which leads me to believe that if this is about to collapse, then we can make a very brutal drop down. We've got anything close to supports in here. It's just very tiny supports that we're going to rebound in an intraday basis, but nothing in too close to do it in daily chart time frame. Which means if we drop in here, I think we're dropping 6% straight line in terms of FTSE. And guess what? This is what's expected for all the stock assets to me. I mean, the entire assets are going to drop down brutally, triggering all the stop losses at once. And you can expect a very brutal day that is probably going to make a -4 to 5% for no reasons. I mean, it can trigger without a single catalyst. Okay. At that point, we've been very far into distortions, which means we don't really need to have a reason to go down. It just needs to trigger stop losses, and it's just being a falling river of stops, one triggering the other and the other and the other, and no one buying. Okay, so be aware of this. I've been warning you for weeks about that. Once again, I don't do magic with the timing. I can be wrong for weeks before I get right, but I still think that I'm in the right, and the market is not doing rational right now. Regarding the gold, I mean, they've been trying to sell this once again. It's just doing everything they can to just prevent the money from flowing away from the equities. I mean, anytime we've got an opportunity to fuck up the bears, or at least to prevent people from getting into safe havens and confirming the bearish reversal, they've been trying it as hard as they could. And we're still having it today. I mean, today we've been trying yesterday to break up the gold, failed it once again. So they've been selling aggressively that shitty gold. But at some point it's going to break up. And at that moment, it's not going to be pretty. So for now, it still needs to remain speculative as long as we haven't broke up that resistance. But the moment we'll make it, you can be sure it's not going to be pretty for the bears. For those who are selling this, I mean, they've been selling for months. They've been trying to fuck us up. And just to set things straight, this is what we call the average non-normal pricings. We've been trading into tiny ranges. We never, ever, ever have broken a single resistance, which means creating supports, overlapping the resistance, going down. Creating support, overlapping the resistance, going down. And then trying to repeat the same shit once again, but at some point it's not going to work. And at the moment we'll figure out to break up a single resistance, it's going to be the exact same opposite, which means any resistance broken up will be tested as overlapping support and taken as support instantly. And we're just going to have some kind of crab move. Okay, you're just moving down step by step, always going down, never ever retracing upward. And I think we're going to have the exact same opposite, but in a more brutal approach. Okay, because whenever you create distortion, the recorrelation phase is generally faster. So I expect the market to brutally reverse to the mean, which is right here. It's the mid-range part. But at some point, I expect the price to just keep on going ahead later on to just get to the final target that we've been highlighting long ago. Same thing goes for the silver. Still has to be speculative at that point, but anytime we're going to manage to break that up, it's going to be validation. I'm going to move to leverage trading as usual. So for now, I just remain patient. I stay patient and I wait for this to wane to collapse. And I think right now we have a pretty nice timing to play this. And we'll see how it goes. Regarding US oil, I expect some kind of deeper pullback into the 2-hour chart time frame to get in there to still trying to trigger a bearish entry, but at that point it's still a little bit too early to forecast. So I just keep this ongoing, and either when I see that we have this, I'm going to put an alert down here. Okay, instead of there. So just going to wait to see the price going there and trying to find some bearish signals in here. So what I would like is for that range to be invalidated. So for some reasons to range that thing and getting a bullish reactivation afterwards, just to get a taking profit pattern or an exit in here to get back in the trend. But at that point, it's too dangerous to trade. Could be a triangle, so we just need to wait. The range is not necessarily terminated at that point, so patience is required. So wait for now on the US soil to get the range to terminate. Whenever we get back to support area, I think that will be interesting to trigger some entries. So I'm going to put an alert on the support as well, and waiting for further informations. Regarding the forex, GBP USD is doing pretty well. We're just moving slightly higher, and I expect the price to reach out to the resistance slowly but steady. I mean, at that point, the bears are always trying to fuck us up. You know how the deal with Wall Street. Anytime we've got risk signals showing up, they're trying to just stop the fire before it can spread out. This is how it is. They know that if the fire starts to spread, everyone is going to go to safe havens. They don't want it to happen because they've been putting too much money into the manipulation in the VIX, in the gold, and they don't want the market to brutally reverse. But I know this is going to happen at any point. It's just that we need a trigger, and at some point we'll have it, and they will have to reverse the positions brutally. And I want to be there to take the stop loss of those who haven't been anticipating this. Some will have done clean manipulation, getting in and getting out before things get dirty. Those who will keep on playing that dangerous game beyond the red cross limits, I'm going to take their stop losses. I want to take their money. They've been trying to manipulate the market, and that's not how it works. The market cannot remain manipulated for a long time. It can be a tiny shot, and it's been lasting for 4 fucking months. And at that point, I think it's not going to last for 2 more semesters. Okay? So EURJPY doing pretty well. We're just consolidating in here, so basically waiting to get further confirmations. We've been having a double bearish, but to be honest, I'm going to update update momentum, because this shouldn't be triggering right after an exit pattern. So to me, double exit is really a lot more powerful than those really tiny red cross. So don't take that as a bearish signal, bearish confirmation. I really much think that the market is going to oscillate near those prices, just create some kind of range. So we are early stages of a range formation, so I would really suggest for you to wait to have that wave 2 completed, and whenever we have that, I think shorting will be a pretty fucking nice option. I don't think we're going to pull back that high, so pretty much expecting that we'll probably fail at 38.2% retracement. So waiting right now to terminate to complete that range, and whenever we get back to support, I'll trigger the validation trades and getting into leverage trading, to more leverage trading on the EURJPY. So right now, waiting is the only choice we have right here. Regarding the USD CAD, I've been taking a short entry. That was expected. Is a range trading in here, so I've been putting in validation level in here. We shouldn't be breaking any resistance at that point, and the latest resistance is clearly right here. I got a stop loss at the market in here. That is the exact price of a target, which means I've been putting the stop loss at a 1-to-1 ratio of the target I have right here, which is that support. So I'm heading toward that price to take my gains, and of course if the market reverses, then I'm going to give a loss, and that's how it is. USD CNH is leading to a potential reinforcement to come later on. I'm going to explain how it goes. I think we got a wave 1 in here, 1, 2, 3, 4, 5. We might be retracing in 2 waves. We probably have made a wave. I'm expecting a deep B wave pullback and probably a C wave to get up here. So I'm expecting the price to do this. And if that's what's happening right here, I think I'm going to take bearish reinforcements to extend my expositions on that bearish market, but only to that condition. If we're heading there with a single straight line, that's nothing I care about. I want to have 2 subwaves to get there, and if that's the case, then I'll get to reinforce the position in here. For now, I only have a bearish entry right here, and I'm waiting to see how it goes. Okay, I've been putting in validation alert right at the market top. If we're getting there again, I mean, this is red flag, but doesn't necessarily the end of the world. I mean, this is just invalidation. To me, the stop loss remains up here. AUDNZD is just working its way inside the range. I think we're in late stages of the range, which means I've been lowering my buy entry signal. It was back here. It was up here back then. I've just lowered it right here because I think we're moving ahead with that structure, and I think that the next time we'll go higher will be the good one. So I've been lowering my price entry. USD MXN, I'm still waiting for the price to figure out that area. We're having a bullish momentum, but as you can see, this is still ongoing to the current candle, which still requires us to wait for an extended, how long does it last 15 minutes. So in 15 minutes, if that is closing like that, we're going to have a taking profit pattern validated by a candle close right into the blue area. So those who would like to aggressively speculate can take that as a confirmation. This is really, really aggressive. I would suggest not to do it, and to do as I said, meaning waiting to get a candle close above the breakout level to be sure and confirm that this was a fake breakout. And if that's the case, then I think this is where the buy entry, the low risk buy entry, is viable to me. So I could take that very brutal and aggressive entry, but I'm not going to do it. I think waiting right now to get this to reverse first is a more rational choice. Because of the dollar, I think the dollar is a problem in here, not necessarily the Mexican pesos. I think the dollar can just collapse a little bit more at a short-term time frame, and I wouldn't necessarily be surprised about that. And if that support is broken down, you'd be sure that there will be a lot of stop loss triggering. Okay, so I don't want to be among the guys who are just aggressively buying here and just get stopped out on a nasty lower shadow candle. So I'd rather like to wait for that candle to eventually plot, and then afterwards take the wrong footing scenario in which we're going to buy aggressively after that lower shadow candle. That's pretty much it. I've been reinforcing Tesla yesterday as well. Been taking a bearish entry, but this one has been covered inside yesterday's video on the live room, so you should have that available in the replay accordingly. I've been shorting Boeing as well yesterday. All of this has been said in Twitter and in Discord. So that's not doing pretty well at the moment. I thought the market would just collapse, and it isn't. But we don't have anything close to a bullish momentum. So from right now, I think this is just some kind of pullback to just avoid the red flags. I mean, this is clearly a red flag of a wave 2. We have the 2 waves pulling back to a resistance. So this is wave 3 along the way, but I think the market is just doing anything it can to hold that up as long as it can, just to prevent the bears from jumping in. I mean, what we want is for the speculators to remain bullish. It's absolutely necessary because this is the only thing holding the bears, the long-term bears, or at least the long-term bulls taking their profits. So long-term bulls taking profits is bearish demand, okay? And on top of this, the only thing that makes us hold things up is the fact that we'll still have short-term speculators to the bull side. They're thinking that the trend is still in place and intact and that it will keep on going. So they are buying the dips, and these are the ones that are supporting the price. If those guys are reversing to bearish, then we'll have only sells on that market. And as I said, when a market has only sellers, it's just a market that is falling apart. Okay, so for now we're still kind of ranging higher, but at some point things are going to reverse and it's not going to be pretty. All right, I think that's more than enough for today. We're going to switch to the common parts. How to insert that indicator of volume stuff? I use the fixed range. Okay, it's a paid one, not of me. I mean, that's not an indicator of mine. It's an indicator from TradingView, and it requires you to have a pro account on TradingView. But by the way, I'm going to remind you that if you join us into Discord, let me just open that. I'm going to show you how this goes. If you join us into Discord, it doesn't necessarily have to have the indicators or anything like that. I mean, this is just for free, and this is nothing close to a partnership that we're having with TradingView. It's just an offer that they release to everyone, and that we're making you profitable. We're giving you profit from, which is right here. I think we've been pinning that thing into the announcements. No, into the general channel. I think this is where it is. No, it's not. So where did we put that? Maybe in announcements. Yes. So here it is. Now we now have a deal that can get you 30% off of all spending you could make on TradingView, and you can also take the minus 50% deal out of public prices, and this is cumulative. You can get the 2, which means you get minus 50%, and then you get 30% refund out of what you've been spending out there. That makes a minus 65% out of public prices, and just to set things straight, that makes a Pro Plus plan at $8.75 per month, and that is pretty fucking cheap. I mean, at that point, I think everyone can handle this. Or if you can, just don't spend money out of it for no reasons. If you really have a tiny capital amount, then just don't spend it for that, because it's going to cost you $179 a year to get the Pro Plus plan. So if you're having $1,000 to invest, this is way more than what you can afford. So in that case, you just don't pay for the Pro account, and that's it. I mean, if you just have 1,000, don't spend the money into TradingView. That would be totally worthless. So moving on, okay, you can use that plan to get into Pro TradingView. Of course, this is nothing close to a partnership between them and me. It is just a random thing that everyone can do, but it's just that you need to have at least $300 cash back in order to get the cash. Okay, so what we've been doing in here is just offering this for free to everyone. We're handling the thing that to getting the cash back and sending it back to you without taking any fee. And to do this, you're gonna have to contact Duke inside the channel. It is at Duke. Okay, you just talk to him. This is the guy who is handling things. So you just set up your things right here. You just do how it says inside that Google Doc. You just follow the instructions, and then you contact Duke to get the cash back. Okay. So this is just for a tip, but as I said, only for people who have at least 3 to 4K of capital amount. If you have less than that, this is not reliable enough to pay for this. This will be too expensive for your account, and you don't want to lose your money into just spending for extras in the platform. Okay, but this is when you've got the Pro plan, this is going to show up into the indicators folder or window, and you're going to get there into the volume profile, and there you got the fixed range. Okay, as I set it to favorite, I'm going to pick up, I'm always picking it up into my favorite tab, but for those who still haven't, this is where you get it. I'm in the world with mask. I don't really get the point. Why are you stammering today? I don't really know what that word means. Okay, I just got a Google translation. I don't know, maybe I've been doing some stammering, but I wasn't really, no, I had good sleep. It's just that for sometimes I'm speaking too fast and I'm messing with my own words. You must be aware, guys, that I'm nothing close to a native English. I've been learning, not taking any single course, so I've been just learning through time. So don't be too harsh on me. I'm doing my best to improve myself into accents and vocabulary and things like that. But this is a slow grinding move. I'm not going to be a pure bilingual tomorrow. Sorry, Phil, what platform and what kind of derivatives do you use to perform your longs and short trades? I think you are related to cryptocurrencies. So I've been using CFD contracts, which is something that you guys in the US are unable to use as they've been forbidden out there. So you can use options when it comes down to stock market, option trading. You can use this. That's some kind of other derivative that allows you to short buying the puts or things like that. Okay. So you can use, I think for US citizens, the best option is really to get into option trading as you don't have CFD contracts. But if you have another nationality, I think the CFDs are by far the easiest way to trade either bullish or bearish on any asset. Looks like Facebook is the catalyst legendary. We'll see about that. I mean, as I said, look at what Netflix did when it traded the day right after. It didn't went well for the bears. They've been pulling back 10%, and we could very well do the same today with Facebook. So don't be over optimistic. That will be a mistake, I think. All right, I think I've been getting all the questions, so I wish you guys a good day, and I'll see you tomorrow.